And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and happy Friday, everyone. Yes, Capital Preservation Friday. Friday, June the 3rd. I'm John Hoagland. Thanks for trusting me with your time. It's kind of a casual Friday. I tend to wear my safari helmet, although today I think it's more of a construction helmet. I'm going to really try and protect myself today. Make sure you trade what you see today. Protect capital at all costs. Make sure you're using stops. It's one of the best ways you can protect yourself. And manage your expectations, because as we all know, and as we say on the forecast and recap all the time, ACH, anything can happen, and anything that can happen is going to. As always, we're going to focus on trying to find accurate context in these markets, always thinking about risk management first and trying to remain patient. We all know that the unemployment numbers came out this morning. The unemployment rate upticked 0.1%. They were looking for 3.5. It remained at 3.6. Last was 3.6. They were looking for 3.5. It just remained at 3.6. The non-farm payrolls numbers last month, there was 428,000 jobs added in non-farm payrolls. They were looking for 325,000. This time it came out a little bit better than that at 390,000. The private non-farm payrolls last month had added 406,000. They were looking for as 325,000 as well. Came out slightly better than that at 333,000. The participation rate went up by 0.1%. We're still waiting for 845 central number, PMI composite in the final on that. 9 o'clock central, we're looking for the ISM services index. And at 9:30, we a talking Fed. Lionel Brainerd is speaking. So all this was stuff that we have to digest during the trading session. So again, it's of vital importance that you trade what you see. Don't trade your biases. Let the market tell you what's happening, and if it's not speaking to you, you might be better off waiting until the market does say something to you. I believe these markets are speaking to us all day long. Sometimes they speak your language, sometimes they do not. Capital Preservation Friday. Make a little money and go on your weekend. Lacey's here. She says hello. She's moosing me to get a pet here. She wants to say hello too. Hello, Lacey. All right. She won't let me touch my mouse. Maybe that's a sign. Jeez, Lacey, come on. As far as other things I'm focusing on, stock indexes, U.S. stocks opening lower, or were trading lower, still trading lower, prior to the unemployment situation, as the Fed moves levers and does everything that they can to try and stave off recession. Elon Musk joins the Jamie Dimon crew in saying that he has a super bad feeling about the economy, calling for about a 10% reduction of the Tesla workforce. Crude prices have really kind of stalled at an important inflection level, pretty close to the weekly kickoff high here, even after OPEC agrees to increase production. But we did have a 5 million barrel draw in crude stocks here in the U.S. announced yesterday. Economic opinions really seem to be polarizing. We have Jamie Dimon talking gloom and doom, and we have the Bank of America CEO Moynihan far more optimistic in that regard. So we have to make these decisions. We are the traders. We have to trade what we see. As always, make sure you hit the lucky like button, share, comment, question, feedback, heckling, and love are always welcome here. Make sure you subscribe to our YouTube channel so you get notified when we do go live. Looking at the VIX, the dollar index, and the 10-year yield just before the 7:30 number came out, VIX was up up a little bit. It was 25.43, still not all that impressive. As far as volatility is concerned, the dollar index up slightly at 101.92, and the yield on the 10-year had a little bit of a lurch to the upside here, 2.96%. Got to say good morning to everybody. Brian's the first one in the room today. You win the prize, Brian. Marcelo Scott saw, and he conquered. Marcelo again. Tom, my brother, good to see you, sir. As always, love you very much. Spencer, Tachyon James, good morning. Charles Alfred, will you please explain the opening or trade setup? Thank you. Yes, we will look at that. We'll watch the crude oil opening, and we'll see if we can see if there's an opportunity there for us. It's very simple. Sometimes it's very cheap, but it doesn't always work, as nothing always does. Frederico, good morning. James, good morning. Kieran, anyone know the reason for these 8:30 volume spikes in index futures? Kieran, it depends on where you are in the world or in the country. 8:30 Central Time is the opening of regular trading hours. It's when the pit used to open up. So there's a increase in participation in more of our longer time frame traders. At 7:30 this morning, we had an important piece of information released by the government in the unemployment rate. So if you're at 8:30 and 8:30 Central and you're noticing an increase, that's just really the regular trading hour open when all of the participants are available and ready to impact the marketplace. Brody, good morning, James. Good morning, Sonny. Saw an NFP this morning, usually some kind of news. Yeah, so Scott answering Kieran's question. Thank you, Scott. Jerry is awake. Hopefully John is too. Kieran, yes. Laura, good morning. Vince, good morning, sir. Zachary, good morning to the trade family. You got your cup of coffee. I got my happy little cup of coffee here. Zach S., happy Friday. Yes. What do we got going on here? Okay. Glitter Sandwich, good morning. Sarah Hall, good morning. Love and prayers to you as well. William J.D., looking forward to seeing you next week. We're going to have some fun. Keegan, good morning. Terry King, Three Lions. Tom, hit the lucky like button. Yes, the lucky like button. Bill, good morning. Sarah Hall, good morning. Brody from Olympic Peninsula. I'm on Vashon, close to you. Hey, you guys can meet for coffee one someday. Zach asked, good morning. Joe, one more day in the penalty box sim, back to the combine Monday. Trading sim like it's live. Good. That's what you have to do. Purposeful practice, deliberate practice. How about that hollow rally call yesterday, Hogue? Well, we did add some open interest in the S&Ps. We're going to see there's a lot to talk about in these equities this morning. What does happen, what doesn't happen can sometimes be equally as important. We're going to be looking at that. We got that late day spike. You're right, and we are currently rejecting it. So we're going to take a look at that again on the charts. Good morning, Rick. Good morning, Rusty Golfer. Rick, your brother loves you, and I'm talking about me and your brother Tom and your brother Daryl and your other brother Daryl. We're basically below Monday's open now. Bulls are in trouble. Even me, as a permabull, could not buy that rally. Yeah, it was a tough rally to buy. If you were in Make Hogue money, we started the day short. The opening range was the high of the session to begin with, and I think we got a little bit greedy in the fact that we didn't take it when it was a pretty substantial profit. We ended up taking a small loss on it, but overall for the week we're up about 1,100 in Make Hogue money, and I thank you very much. You guys did it. Ron, good morning. Khalid, Joshua, good morning. Blessings to you as well. Good morning, Jan. I was shorting all day yesterday with tactical shorts, but wasn't in a position this morning for the dump. Yeah, it's so hard that to get a good reaction or a good read when an important number comes out. There's always the knee jerking around. I choose not to play them. I've played them enough, and I'm about even for my career on taking positions into economic numbers, so I just don't. Good. I'm glad you're having fun with Make Hogue Money, Joshua. That is very important to me. We want to make sure that it is an informative, educational, and fun event for everybody. Thank you for that feedback. Any constructive criticism, tell me. If you love it, tell everybody. That's my policy. Let's jump into the charts now. Let's jump into the E-mini S&Ps. As there is much to discuss, we're going to watch the opening here in crude oil in about 4 minutes. So let's talk about the S&Ps here first. All right. So we've set some balance extremes on the daily. We had the breakout to the upside yesterday, which, as Dan mentioned, does seem a little bit hollow, although we did add 11,000 in open interest. Not hugely impactful. Still, just a boost in open interest indicates that there was some potential new longs coming into this market, which are currently underwater, as Dan said. So range rules are going to apply until they don't. So I don't see that we're at either extreme, the high or the low. So I'm going to be cautious today. We're going to be opening, it looks like, in range and in value. What we did not do yesterday that's different than the NASDAQ, we did bring open interest, the first increase in open interest in 5 sessions yesterday on this move to the upside. What we didn't do was trade to our recent high, which was in the overnight session Sunday night. All-time highs and recent highs, the market does not like to leave them in overnight sessions. It likes to go recheck them in regular trading hour sessions. Now, take a look at this 30-minute chart. We know we had a late spike. Okay, we are opening below that late spike. That is marking rejection of higher pricing. We should be looking for opportunities to sell strength today unless something major changes. Here's that Sunday night high that we were looking at to go and recheck that, but we fell short of it. Is that important information? What doesn't happen is as equal and in importance as what does happen. So we had this big up move, and we could not go recheck that overnight high, recent high. The regular trading hours don't like to leave those. They like to go recheck them in regular trading hours, as we did in the NASDAQ. So this is kind of important. I'm going to just kind of go over the base of the late spike is 41.63. The start of the late spike is down here at 41.54 quarter. Spike rules. And again, ACH, anything can happen. Anything can happen. So it appears as though we're going to be looking for opportunities to sell strength. We failed to get to this level. That's important information. We could still go back up and recheck that level. But overall, I think, this extreme up here is the upper extreme of an area of balance that we've created. And we're kind of in the middle of it. And we're kind of in the middle of value from yesterday, which was a very toothy, long, thin profile. This was an emotional move to the upside. Albeit a little bit hollow, maybe. Time will tell. We've got our breakout here. We got a secondary breakout above here. We're coming back to that level, which is pretty much center of yesterday's range. Half back can be somewhat important. Look for afternoon pullbacks. Look for early morning pullbacks if we're going to be looking for longs. It's going to be a challenging trading day, ladies and gentlemen. I'm going to be, like I said, not searching for trades. I'm going to be patient and let the trades come to me. The market is talking to us. what is it saying to you, and is it speaking softly? I find that when the market speaks softly, those are some of the better opportunities. If the market's loud, that's telling me that I may be a little bit inclined to respond irrationally to the marketplace. Here's the crude oil again, somewhat of a range that we've established here, basically centered around weekly kickoff high. We're getting some pretty decent upside move here. We're going to check this on the opening range trade right now. So this is the daily. This is the 30-minute. Open overnight inventory was long, was short. Now it's kind of resolved to itself. We're looking at an opportunity to catch a breakout above yesterday's range. The opening range is the first minute of trade. Let's see if we get an opportunity off of it. Here's that first minute. Okay, first minute is over. We've got, well, I don't know why this thing is doing this, but the low of the opening range is 1764. The high of the opening range, 1788. So we've got a 24-tick opening range, which is not all that big. We just took out the low of the opening range. If I were to take this, I would take the short on a stop breaking out below the opening range, which would have me short without any slippage right around 1763. My stop is then going to be placed on the other above the other extreme of the opening range. So I know I'm going to have about 26, 27 ticks on this trade. That's the risk. If the opening range remains the high of the session and we get a nice move to the downside, we're looking at 40, 50 ticks to get to 2-to-1 reward over risk, which is entirely possible in crude oil when you think of the ranges that we've been having. Now, do I want to take this? Well, the market is offering an opportunity to us out of range. It has now closed the gap. If it reaccepts inside the gap, moved back down to weekly kickoff low, wouldn't be out of the question, which is more than 100-tick move. But we have to accept back in range from yesterday. Even better would be to be short up here, accept back in value from yesterday, and then finish the value area special situation play all the way to the downside. So that is what the opening range trade is for me. There are people that look at the opening range differently. Some say it's 30 seconds. Some say it's 5 minutes. To me, it's always been about that first minute of trade. Okay? Trying to find who answered that question so that I can make sure that I got it relatively clear. If you do have more questions about that, you can always join us for group coaching. That's going to be on Monday. And I'm going to put the link for group coaching. Again, that's Monday at 1 p.m. Central. Here's the link to register. Any questions you have, just come. I try and get them all answered. All right, so we've got the opening range, the high in crude. We're showing some possible acceptance of range yesterday. You're welcome. You're welcome. All right. Let's take a look at the NASDAQ, which is similar but different than the S&Ps. We have already pointed out the fact that yesterday we did take out the high of the overnight, Sunday night into Monday, and we checked it. We took it out. The extended trading hour high on Sunday was tested. We put in a higher high. We still seem somewhat range bound here. We did increase open interest, but only by 2,000. So Dan Emmons I'm feeling he's kind of right. Although we did increase open interest, it's somewhat inert. I don't think it was enough to impress, and I don't think we really put any new longer time frame longs into this market, especially before unemployment. So we had the bull flag breakout yesterday, very similar to the S&Ps. We do have a late spike. The late spike here, the base of it is 12,866.75. The late spike started at 12,816. We're opening below it. This is marking rejection of higher pricing, which I think makes sense because we did come and check this recent high in the extended trading hours that occurred on Sunday night. We traded to it. We checked it out. We came, we looked, we saw, and I don't think we liked what we were looking at up there. Obviously, we've got some overnight shorts here. We're going to be opening centrally inside the emotional value area from yesterday. Value is going to be very difficult to establish in a day that is this directional, and there's plenty of areas that are kind of screaming out for potential repair. Our point of control up here, which takes us to the base of the late spike, which might be a decent area to find some resistance. We've got another high volume node here. We've got another high volume node here. If we're going to fall into repair and take care of any business that didn't get done yesterday, it would make sense for me and for anybody to try and remain patient, wait for the opportunity to see what the market does at point of control from yesterday. That's the highest volume node from yesterday. Or how about this volume node? If we can't get down through there, that might be an interesting opportunity for an entry. Or here might be a decent idea for an entry that would basically kind of bring us back to our trend line where we broke out from our bull flag. Try and stay patient. Okay, so Keegan, the whole moving averages, good eye, are a 9 session and a 13 session. I don't actually have them on the NASDAQ here. 9 session and 13 session. So here you can see yesterday we were short on the open. We wouldn't take those shorts. We lost money on them, but the hulls basically crossed over right here, and then price started holding above them, and once it starts to hold below the 9 or the 13, a potential change may be coming, which we didn't believe that yesterday. We had to put up this late spike. As far as the TPO, it's regular trading hours for me. So this is yesterday's regular trading hour TPO chart in the S&Ps. So it goes from 8:30 a.m. Central to 3 p.m. Central. And there's our late spike. All right. What are we at? Where are we at now? We're on gold. Gold. Range bound. Short time frame control. We did have an increase in open interest almost for the first time in 2 weeks on this push to the upside, but did remain range bound. Now we're still range bound. We're coming back into range. Fading the extremes of ranges is what we're supposed to be doing. Unfortunately, we didn't get that opportunity if we were sleeping last night. So I'm going to continue to remain focused on the extremes here. Here's our move to the upper extreme yesterday, which is basically last week's high. Last week's low is pretty much our lower extreme for this week. We did take a look down below and reject there. So again, looking for short time frame levels with which to find opportunities. We may have a point of control up here. We may have the last week's high. We may have yesterday's high. Down below, we may have this point of control down here. We may have last week's low as opportunities. Anywhere in the middle, I feel, is a kind of a random walk. And we did, I think, leave the opening range at the high of the session today, but I couldn't play that because of the unemployment numbers. All right, so here's the euro. Okay, the market opening, bordering value, inside value, overnight inventory, long to a little short, now back to about even. Again, I'm looking at this market like we're range bound. It's very similar to gold. If we get an opportunity up near last week's high, that's going to be an area of interest to me. This week's low, also an area of interest to me. But if I'm going to trade this, where we opened in the range and in value, so the initial balance will be somewhat important to me. Because the initial balance, if we were to go back and look at the profiles in just about any market, the one extreme of the initial balance remains the higher the low of the regular trading session at an exorbitantly high rate. Maybe it's 65%, maybe it's 70%, maybe it drops to 50 and goes up to 90% at different periods of time. But if the market is in balance and in range like this, I'm going to focus on the extremes of the initial balance because it limits my risk, and I just might get lucky, get a cheap trade, and then have the market take out the other extreme of the initial balance. All right. Again, patience. Patience. And it is, again, Capital Preservation Friday. Capital Preservation. Oh, look at this. We had our move, acceptance of lower pricing, digestion of lower pricing, unemployment comes out, and we drop. We get a spike in rates. Of course, this is gonna drop. I don't know what to do with this market. We've got a couple of swing lows down here that could easily be targeted. We know we're just under 2 weeks away from the next FOMC meeting where we are going to be raising rates. It's all about the timing and the place. All right. Now the nat gas, what happened here? Well, we're starting to fall into range. We're starting to fall into balance. We're past the roll. One more thing about the currencies. The currencies are going into rollover as we speak. They're scheduled to roll from June to September next week on the 8th of June. We'll be watching volume. We'll let you know when we're going to be moving over. We don't have to worry about that yet here in the NASDAQ or the S&Ps in natural gas, we certainly don't. We just rolled over. We've got another couple of weeks where we won't have to worry about it, and we're range bound as it is. Not saying that it's easy. We lost 1,000 in open interest on this pushback to the downside. Maybe a little profit taking off this, just a little bit of this move to the upside. This market really seems to be protecting $9. We've been protecting weekly kickoff low here, which is 817.5, and we're range. We're in balance. We are in an area of potential repair. We've got our high volume node here. We've got a high volume node here. Overnight inventory was too short. That's now been reconciled. Try and stay patient. Remember what we talked about at the beginning here. It's trading what we see, not what we think. It's protecting capital. Make sure you're using stops. Make sure you're trading it at areas where you're thinking about where you're wrong first, and then see if you can get in to the trade in a cheap way. That's some of the best trades I've made in my entire life have been taken solely because they were cheap. Because I'm not that smart. I don't know what the market's going to do. Nobody does. So if I'm just going to be looking for opportunities to manage risk in a cheap way, sometimes you'll get lucky and you'll have a big winning trade only because the market gave you that cheap opportunity. So that's what I'm going to be looking for today. I'm in no hurry to do anything. I don't have to do anything today. And I can still call myself a trader. Let's see what else we've got going on here. Brody and Sarah getting a cup of coffee. Huh. Hey, that's good. Let me know if you guys do that. I'd like to be a fly on the wall there. The Apple back to yesterday's low. NASDAQ will scratch heads. Who bought yesterday? Market has me gassed up, pun intended. Yikes. Stay patient. Yes. ACH. I look smart. Well, it's the makeup. Just kidding. I don't wear makeup. How to survive. Assume every trade you make is going to hit your risk. Then you'll tend to trade smaller. And you want to really try and accept the risk you take on every trade. You don't want to be forecasting. You don't want to be resulting. Realize that anytime you put yourself at risk, you are at risk of taking that loss. Love talking trading. Me too. Not many traders out there. Well, we got you covered here. So this is it for the week as far as content, and you won't have to see me again until Monday if you choose to. I appreciate everybody. I call you guys my trading family, and I have family here. We're all family. We can root for each other for sure. There's an abundance in these markets that we don't even know that we can tap until we start to tap into it, and that's what we're looking for. We're looking for your success. If we can help in any way, that's what makes me happy. So get out there and profit today. Have a good trading day. Put it away at some point. You make some money. Nothing wrong with walking away. It's a beautiful day here in Chicago. I got a million things to do in the yard. If I can get to them today, I can get to them today. But be kind. Be kind to yourself. Be kind to others. Say a prayer for world peace. Pray for those that are suffering right now. And blessings to you all. Again, thank you for coming. Thanks for watching. Thanks for listening. Thanks for participating. I look forward to a good, restful weekend for everybody and another interesting, challenging, and exciting week next week. Get out there and profit. I'll see you in the proverbial trading pit here in about 5 minutes. Trade well.